Good morning. I'm Jane Morgan, the Investor and Media Relations Manager for Hartshead Resources with the ticker code HHR. Today, I am joined by our CEO, Chris Lewis, to discuss the operational update released on the ASX. Good morning, Chris.
Morning, Jane. How are you?
Very well, thank you. So, Chris, in the operational update released earlier this week, we've announced that Hartshead's ongoing commitment to progressing the P2607 Joint Venture, subject, of course, to receiving certainty regarding the future fiscal policy. So how does Hartshead envision leveraging its resilience and adaptability to maintain momentum and capitalize on potential opportunities?
Yeah, no, thanks, Jane. It was quite an important announcement that we put out just to really update the market about where we stand following some of the fiscal uncertainty and upheaval we've seen earlier this year. I think what's important to note, and you're absolutely right to talk about resilience, is what a strong position Hartshead are currently in. Despite what we've seen from politicians around future oil and gas policy, if you look at Hartshead as a small gas development company, we're in a very enviable position. We have a very high value gas development project in the Southern Gas Basin in the North Sea. We have relatively very strong balance sheet for a small cap gas development company. We have a great farming with a highly motivated and engaged joint venture partner who, alongside us, wants to see the project move forward. And that farming commits a significant amount of capital to our gas development project. We have a very strong gas market to sell our gas into in UK and in Europe, and that's a market that we foresee requiring gas supply for a long time into the future. We've got a really clear development plan of how to monetize our phase one development project, and that's 300 BCF of gas that we hope to bring to market in the near future. We've got good support from the UK oil and gas regulator, and they have been working with us on our development plan and are very supportive of us getting approval for that. Despite the news around the headcount of the team, we still retain a very strong technical team. So, the combination of our project, our partner, our capital, and our team, we are in a very resilient position. And what that does, it does put us in a position to maintain some of the project momentum. We continue with our technical work as we would have done in terms of refining our understanding of the subsurface for our well planning, for example, or trying to retain some of the optionality around some of the key contracts that we tendered towards the end of last year and early this year. So we are keeping work going to maintain the ability to progress with the project at the right moment. And we're also looking at alternative sources of funding, which I think we'll go on to talk about presently. So we're in a great position, and that position does allow us to be able to maintain our momentum in the project. And then ultimately, as you say, capitalize on the opportunities. What are the opportunities? Well, our license P2607 is still of incredible value to shareholders. Our phase one development project, as I've said, is 300 BCF of gas reserves. But in total, when you look at several phases in the license, we could get up to nearly 800 BCF of gas to be developed and delivered to the UK gas market. So a really valuable project, great opportunity. And I think the position we're in terms of the team and the project and our capital resources will enable us to move forward and fully monetize those opportunities at the right time. And the right time will be when we understand the fiscal landscape. So I think we're still in a really good position, Jane.
Thanks, Chris. And can you share more details on the innovative funding arrangements being explored to streamline upfront CapEx for the JV? And further on that, how do these initiatives align with Hartshead's commitment to driving sustainable growth and maximizing shareholder value?
Yes and no. And I mean, you'll appreciate these are confidential discussions we're having with possible counterparties. We don't want to go into too much detail at the moment. What I can say is we're looking at alternatives of how to fund some of the critical infrastructure that will be required to produce and transport the gas to the UK market. What that would look like possibly would be that a third party would come and pay for some of the infrastructure rather than that being CapEx that the P2607 joint venture have to fund ourselves. And then that investment would generate a return through a tariff that we would pay for getting our gas from our license area to the UK gas market. These aren't unusual funding arrangements. They've been done a number of times in the UK and internationally, where third parties pay for infrastructure, but we would retain the value of the molecules. And it's really a way of looking at a different funding solution for the CapEx, reducing the upfront CapEx, moving some of that capital commitment into operating costs through a tariff, and really trying to optimize the way the project cash flows work to unlock a bit more value for shareholders. So interesting discussions at the moment. I'd hope to see those moving forward in the next few months and hopefully be able to give shareholders an update in the not too distant future. But you'll appreciate there's a limited amount I can say at the moment.
Now, can you elaborate on the productive discussions with political stakeholders aimed at fostering a conducive regulatory environment for oil and gas development?
Absolutely. I mean, I'm not going to mention who I've been talking to. I'm not going to name names. But I have been in discussions with people across the political spectrum, all interested stakeholders, and that's not just political parties on both sides of the House of Commons here and their advisors, but also people in the supply chain, unions, and industry trade bodies that we are members of, and really trying to get an understanding of what people see coming down the track in terms of policy, and how people want to see policy affect the oil and gas business in the UK. The one consistent message that I have been getting of any political persuasion, any of the stakeholders that I mentioned, is that people want to see the oil and gas business in the UK continue. They want to see a fiscal landscape that still attracts investment and that still makes it possible to move the right projects forward. What do I mean by the right projects? Well, projects that have low emissions, projects that deliver gas to UK households and businesses to help with security of supply, projects that will deliver investment and jobs to the UK. And I'm convinced that whether you're talking to the unions or the Conservative Party or the Labour Party, people want to see all of those activities continue. So it's been very encouraging so far, the discussions I've had. I'm sure there is a workable and pragmatic solution out there to getting the right fiscal landscape that any incoming government would want after the next election. And we're working very hard to achieve that. I think the difficult thing at the moment is I can't really give much guidance on timing. We don't know when the election will be. We don't know when people's manifestos will be published. We don't know when there will be a budget after the next election. So these things will take some time to iron out the details. But I'm feeling cautiously optimistic that once we see the details, it will be a fiscal landscape that we can operate within.
So you know that the gas price has strengthened recently. So how do you see prices moving in the future, and how does this flow through to project and shareholder value?
Yeah, it's been an interesting gas price market in Europe, which is what really influences UK gas prices. We saw very, very high gas storage inventories in Europe going into winter, and then we saw a very mild winter. And so we saw quite a soft gas price during February, for example, where you would normally see gas price increasing through European winter as gas reserves get drawn down. So it was unusual, but we're back to, I would say, a normal gas price environment now, about 70 pence a therm. And I've seen a lot of commentary recently around where people see gas prices moving in the future. I think common acceptance now is that Europe and the UK are heavily dependent on LNG. LNG is the marginal molecule when it comes to gas supply and therefore governing gas pricing. And so, we're really looking at the cost to land LNG in Europe will underpin and set the pricing for gas in the UK. And when you think about what our marginal molecule is, that comes from the US. You think about the price to land US gas in the UK and Europe, it's in the region of 70 pence a therm, which is where we are at the moment. So I see long-term gas pricing, being stable around 70, 80, 90 pence a therm between summer and winter, probably averaging somewhere, 80, 85 pence a therm. And that's a really good price for us. I mean, our project is super commercial at those values. Using round numbers, 300 BCF of gas at £1 a therm generates, I think it's about £3 billion in revenue. So, at 80 pence a therm, you're very close to that. You're about £2.4 billion in revenue. So, those are good gas prices for us. And our project works very, very well at pricing significantly below that, and certainly below the prices we saw in January and February this year. So, I see a sustained strong market, gas prices underpinned by LNG, and good prices for the project. And obviously that then flows through to value for shareholders. When we move the project forward, that really will help us crystallize the value in the 300 BCF that we're going to develop.
So Hartshead's progressing with the dialogue on project finance and infrastructure funding. So what milestones and advancements can investors look forward to in the coming months?
Yeah, the big one, obviously we've spoken about it, Jane, haven't we? The big one is certainty around the fiscal landscape. I would love to be able to tell you that I'll have some news next week. Obviously I can't. It's in the hands of politicians to give the industry some certainty. What I can say is across the board, industry is working very hard to try and get that certainty and understanding of what the fiscal landscape looks like. And we will have some news on that at some point. I just can't really tell you when. Other things coming down the track would be, some more clarity on possible innovative infrastructure funding solutions. We are working on that as we speak. Again, we are working with third parties and counterparties on the commercial and possibly engineering aspects of that. But I would hope as we move through this year and certainly into Q3 that we'd be able to update the market on that. We have a number of applications in the 33rd licensing round that closed at the beginning of last year. We have had some correspondence with the UK oil and gas regulator, the NSTA, around that. And, we do still expect to see an announcement in the first half of this calendar year. When that's going to come is a little bit unclear at the moment, but we'd like to be able to give some good news about some new projects that we would have that are going to be very similar to P2607, so discovered gas resources in the ground that can be readily developed and monetized. And I guess the last thing to say is that we are still in discussions on the contracting side of things with some of the tendering that we went through at the end of last year and early this year. And we are looking to retain some optionality around those contracts for when we're ready to restart the project. And we may have some news around that as well. So, securing what we understand we've got in terms of contracts for executing the development, some new business in terms of 33rd round, some news on funding solutions, certainly on the innovative infrastructure side that we're speaking about. And then, I would very much hope as we move through later in the year, some clarity on the fiscal landscape. So, lots of work still to do and lots of news still to come out for the rest of this year.
Chris, thanks again for your time today. We look forward to further updates in the future.
Great stuff. Thank you very much, Jane.